And we're recording again.
Hello, welcome to the NCEO webinar workshop for internal trustees. This is on an ESOP Beyond the Basics session, and we look forward to being of service to everyone who's paying attention here by Zoom meeting and not in Minneapolis like we all had originally planned. My name is Andy Mancher. I'm a business valuation professional with Catt, Sapper & Miller. KSM is an employee-owned company. We're based in Indianapolis, Indiana, and work with ESOPs all around the country on business valuation and accounting needs. I'm pleased to have two great co-presenters with me, Alex Perry and Steve James. I'm going to let them introduce themselves, and then we'll start going through our outline for you.
Thanks, Andy. This is Alex Perry. I'm a director at Ventura ESOP Fiduciary Services. Ventura is the team around an individual trustee, Neil Brosen, who's based out of Minneapolis. My office out of Grand Rapids, Michigan. Ventura has been around since 2016. Over that time, we have completed about 100 ESOP transactions and have about 100 ongoing ESOP clients, fully focused on providing ESOP trustee services. That's all we do. Happy to be here.
Good afternoon. I'm Steve James, and I, like Alex, am a non-institutional trustee. My team and I, which is called STJ Consulting Services, serve ESOP companies across the country, similar to Ventura. We've done about 90 transactions ourselves over a period of 12 years, and we serve about 60 ongoing clients now across the country. Our company is a little bit unique in that I'm actually a recovering CFO for an employee-owned company, and had the opportunity to start working with ESOP companies some years ago, which was a company. And me and my now 4 colleagues serve those. I'm happy to be on the call today. Thanks, guys. So just to jump off here, just to remind everybody, there's continuing education credit here from the NCEO. And to receive that credit, you need to make sure that you're logged into the virtual conference under your own name. You've signed in to collect the CE versus the NCEO Google form, and you answer the required polling questions during the session. If you have questions, you see the contact name there, eventhelp@nceo.org. So just a very high level outline of what we're going to go through here. We're going to discuss and with this talking about corporate governance basics. Andy will jump into annual valuation, some other big stuff. Alex will round it out with the impact of COVID-19 on the annual valuation. And then if we have some time, we might talk about the appendix or some other items. So corporate governance on the internal trustee. So I think it's important that as we jump into this presentation that just, I don't want to make the presumption that everybody understands a corporate governance structure. And in this case here, this is a example of a very straightforward governance structure that virtually all organizations operate under. In this case here, the organization starts out at the top of the page with shareholders. Obviously the shareholders are the investors and the entities that start up the entities. It's their job to have an interest in the assets of the company, and they are the parties that elect the board of directors. The board of directors, who as I suggested are elected by the shareholders, they're responsible for the ongoing oversight of the company as well as selection of management. The corporate officers, they are appointed by the board of directors, and they're responsible for the day-to-day operations of the business. The board also, at its discretion, can appoint committees that maybe perform some particular duties. And this is a very standard operating structure of a corporation. It's important to note that versus an ESOP, entity structure, which is a little bit different. And quite honestly, you can see some of the unique complexities as we move to the next slide. So as you can see at the top of the page, while the overall structure is the same as the prior page, you have the additional nuance of the ESOP trust. And the ESOP trust is an entity that's formed for the explicit purpose to invest in the stock and securities of the companies for the benefit of the individual participants who are employees. That ESOP trust has to be administered and protected by what's called an ESOP trustee. That person can be an internal trustee, which today, or an external trustee, such as myself and Alex and his team at Ventura. But I think as we go through this, it's important as an internal trustee to understand some of the complexities that an internal trustee faces and to make sure that we're clear in terms of which hat, so to speak, we're wearing through this exercise. So in this case here, as I suggested, in this structure, you have the shareholder, which is the ESOP trust, which represents the interest of the employee participants. That trust, shareholders' responsibility is to select the board of directors, as we talked about in the prior slide. Interestingly enough, the trustee who exercises that responsibility also is selected by the board of directors. So you can see the inherent conflict that sometimes potentially could create. So I think it's just being mindful that as we go through that we wear that hat. As we continue down the line there, you have the board of directors who's operating the direction and course of the business. Frequently, those directors could be internal company members. Honestly, they could also even be internal trustees, which by its very nature has some challenges. That board of directors is responsible for the selection of the CEO, who in turn is responsible for the selection of the leadership team. Again, with an internal trustee structure, that trustee could very well be on the board. It could be the CEO, the leadership team. And then, of course, the leadership team's responsibility is the selection of the employees, which actually circles us all the way to the top, and that those employees are, in fact, the participants who are the shareholders or the beneficial shareholders of the organization. So I think it's important to understand visually the natural conflict that an ESOP can create, especially if you're wearing the responsibility of an internal trustee, because likely in that structure, you may actually be having a that's in different categories. You may actually very well be at the leadership team role, but at the very top as the trustee responsible for the directors, which are appointing the leadership team. And not that there's anything wrong with that. I just think we need to be mindful of it. Next slide, please.
Oh, hey, Steve, real quick.
Yes,
maybe we could, just to add some color for the audience, does the structure and corporate governance there, is it any different for a partially owned ESOP or a 100% ESOP?
The structure is not different. I think that, quite honestly, the complexity in terms of the trustees a little easier to maneuver, quite honestly. And I think that's a great question, Andy, and that in a minority ESOP, which I'm quite familiar with, it's unlikely that that trustee is going to exercise a level of influence over the board of directors. So you don't necessarily have the same level of influence and control, or honestly, even the same level of responsibility of the selection of board of directors. So I think that I would tell you more often than not, when I see internal trustees, as you suggested, they are kind of in a minority situation as well, Andy. Great question. Thank you. So what is control and who holds it? And this is an ongoing debate in the ESOP community, but I think in terms of the role of the trustee, I think we need to be mindful of those specific roles and how they exercise their responsibilities. So the role of trustee, first and foremost, is to elect and monitor the board of directors. And that's a key responsibility of that trustee. In fact, I would tell you that in my mind, there's three key trustee responsibilities, and that would, if not the one of the more important ones, it's certainly one of the top ones. And as we suggested, that when you select that board of directors, you need to be mindful of the capabilities, the level of discretion that those directors are going to exercise, and quite honestly, how they best complement the direction and course of the business. The second key role is a crucial role for the trustee, is determining share value and monitoring performance. Obviously, as a trustee, you need to make sure that an independent valuation is conducted annually. Also need to make sure that there is a capable valuation firm such as Katz Miller and Andy's team that can exercise that responsibility and has a sense of how value is generated in the business. The next responsibility is oversee the ESOP assets. I would tell you, when you talk to a trustee and you say, what are your key responsibilities? The first thing that comes to mind for me is always protect the assets. And that's a critical role. Two things I would say we have to do is, first off, protect the assets, and secondly is act prudently. And quite honestly, the exercise and discretion of those responsibilities, such as electing board of directors, are in fact being mindful of protecting the assets. So overseeing the assets, always crucial responsibility. Receiving contributions, distributions, and dividends. This is an element to ensure that the dollars exchanged in the plan are properly allocated to participants, but they're also received and distributed, and that earnings are properly allocated to each of the prospective participants according to what's been agreed or earnings been occurred. Ensuring that ESOP loan payments are made. Quite honestly, I would tell you, when I work with companies, and Alex, you probably have the same experience, that ESOP loans, quite honestly, making that payment is not as intuitive as you might think, because frequently what you see is that you have what's called an inside loan, or what the ESOP loan, and then the outside loan, which is generally to us. I think that internal trustees frequently think that the external loan payment is an exercising the ESOP loan payment, and they're generally on different terms and different pay cycles. And quite honestly, we frequently see ESOP loan payments being omitted or ignored, and have a level of correction on that.
Yeah, Steve, that's a really good point. Especially for our internally trustee folks that might be on the earlier part of their ESOP life cycle, it's a really easy thing to miss because there's not a cash impact to the company. Cash leaves the company to the trust and comes back, the same day or maybe within a day or two. So there's not a critical cash flow crunch like there would be with an external loan payment. For that reason, it often gets kind of brushed aside.
Agreed. Thank you, Alex. The next item is oversee participant distribution. Ultimately, the employee participant is hoping that at some point in the future they're going to monetize those ESOP ownership and the earnings thereon. So obviously, making sure that the participant distributions are done regularly, that they're done timely is a responsibility of a trustee. It goes without saying that the expectation of the trustee is to operate the ESOP in accordance with the ESOP plan documents. And quite honestly, I would tell you that as a former internal trustee myself, that's something that I really didn't fully appreciate until I started exercising the responsibility as an internal trustee. Is being somewhat familiar with the trust document is not something as intuitive as you might think. So I think it's something that we never should overlook, because quite honestly, that's how errors are made. And a lot of these other things that I've mentioned, they're not done accurately because you're not following the plan document. Comply with ESOP fiduciary standards and avoid prohibited transactions. Again, you could easily trip a prohibited transaction, something along those lines, especially if you don't exercise in accordance with the plan document. So I think it's important to do that. And then probably most importantly, this is kind of an overarching statement, is act as an interested shareholder, including voting the stock, which we talked about in terms of electing and monitoring the board of directors. That's voting the stock and responding to offers. And I think responding to offers is an interesting point there, in that in this day and age, if we're entering into an ESOP transaction, it's generally viewed in the ESOP community that an independent trustee should oversee that transaction to ensure that the level of discretion, skill, and prudence is exercised truly in an arm's length manner. But when you're responding to offers as an internal trustee, you be mindful that when that point is, in fact, that you may need to understand what a transaction is likely and pending, and when you need to step out of that role. Okay. Continuing on, in terms of responsible for the monitoring of performance, a trustee is going to monitor the board's performance. And in general, you want to make sure that, as discussed prior, that the representation of those board members, the qualifications of representations are consistent with the interest of the company and the employee participants. So being mindful of those activities of board members, where their interests lie, where their skill sets lies, I think is crucial. I think it goes without saying that being an interested stakeholder means that you should be looking at the meeting minutes and making sure that those meetings are taking place, but that there's minutes being generated and that you are monitoring those activities. Certainly in active board meetings, there's always an evaluation of financial performance. And in my view as a trustee, we want to make sure that we get all the information that's being generated in board meetings, and we want those board meetings to take frequently. And certainly financial performance and evaluation of financial performance and quite honestly, actions of financial performance are something that I want to see and hear the board members are doing. Specific areas of concern as a trustee as it relates to board activities is making sure that they're mindful of related party transactions, that we suggest that they don't happen, it would be misleading. But I think that when they do happen, that we need to make sure that the board is sensitive to those activities, and to the extent that they're done in an arm's length manner, and that a market consideration in terms of the nature of the transactions that they take place. Certainly executive compensation that is of keen interest to a trustee, and certainly as a board, they should be actively evaluating the top executives' compensation, especially the CEOs, and quite honestly, building a compensation structure that's consistent with value accretion. I think it's incumbent upon the board that they ensure that that's happening, and it's incumbent upon the trustee to ensure the board is exercising that responsibility. And to that end, synthetic equity, which is a critical element of executive compensation, in my view, at least the long-term executives is crucial. But you want to make sure that synthetic equity, whether it's in the form of warrants or SARs or phantom stock plans or whatever it is, that those things are done in a manner that is not unnecessarily dilutive to the employee participants and the ESOP, but they are significantly accretive, that the success of the synthetic equity plan is aligned with value accretion to the, and I think that can be lost in translation. So I think it's important to make sure that the board is actively looking at those type of things. As we discussed, acquisitions are something that the board always should be actively looking at, as well as accepting offers to be purchased. And I think that's an important thing to make sure that the board, while it doesn't need to look at every acquisition opportunity nor every sale opportunity, that I think that when you do receive qualified opportunities, that the board exercises its diligence in terms of evaluating those investments or sale opportunities, that they're consistent with the best interests of the shareholder, which is the employee participant. And then lastly, and this in my mind is a crucial element that's probably to ESOP companies. And while repurchase obligation, all organizations have repurchase obligation, I think that employee owner organizations are front and center on this, and saying that we want to make sure that the eventuality that all employee participants can monitor their investment in the form of retirement, we need to make sure that the board is always having a vision and an expectation and a plan for that rainy day. Next slide, please. All right, so continuing on, in terms of exercising the responsibilities of an ERISA fiduciary, I think that it's the standard as trustees that we're measured against. And, and as ERISA fiduciary must act and solely in the interest of participants and beneficiaries. I think that seems to be fairly straightforward, but, exercising it as an internal trustee sometimes has its challenges when perhaps you are challenged to do things beyond the participants and beneficiaries for the exclusive purpose of providing benefits to the participants and their beneficiaries again. And then with the skill and diligence under the circumstance that then prevailing that a prudent person, I said that before, acting in that like capacity and familiar with such matters would use in the conduct of an enterprise of like characters with like aims. Again, if you're an arm's length investor, this is how you should be protecting your own interest. And I don't want to overcate the role of a trustee, but it's really just acting as if it's your money and your dollars. I would tell you that the challenge becomes is when you're an internal trustee that frequently the interest of that shareholder, in this case the ESOP, sometimes could be disaligned. And Andy, you referred to a situation where you're a minority shareholder and your majority shareholders could very well have different objectives. And I think that does present some unique challenges. Of course, ERISA fiduciary should make sure that it's in conformance with the plan of documents, as we discussed, as long as those documents are consistent with ERISA. I think it's important to note as well, though, that board actions affect company operations and assets aren't necessarily subject to ERISA. And while we'll talk about this in just a second, it is interesting to note that board members aren't always acting as fiduciaries in their responsibilities, whereas a trustee is. So next slide.
Real quick there, Steve. I think that's a good point for our internal trustees to distinguish, because while they're wearing the hat of representing the ESOP plan, there may be times where your board of directors might need a different advisor than you have as the trustee. For example, you might need to call on your own financial advisor, your accountant, or your lawyer for the company to help on something that's separate from the ESOP trust decision, because the board can sometimes make those decisions and actions on their own without the trustee really having to be a part of it. Is that right?
Yeah, it is. And I think that's a great point, Andy. I think one of the things that I see with most ESOP companies that we're acquiring that are generally, relatively small and are relatively closely held, meaning that management, the board, and the shareholders are almost acting as one. Whereas I think when you become an ESOP, you really do have this clear delineation of responsibilities that management tends to operation, board tends to direction and course, and kind of an overarching responsibility. And then the shareholder, in this case, the trustee, exercises what's interest of that. Each of the parties have their responsibilities. Hopefully we can align those objectives, but I think they do need proper representation for each of their interests to ensure they're doing their job adequately. Andy, you're on mute.
Yeah, sorry. It may not be clear to you as the internal trustee if you need those representations. And that's where you really got to depend on your legal counsel to help you make sure you're navigating those issues the right way.
And Andy, I think you can never understate this as much. And I'd be the first person that when I was an internal trustee, I didn't really fully appreciate what you just said there, is that I didn't really know when I was acting as an internal trustee. And I think you need to make sure that there really is a clear thought process when I'm exercising my job as a trustee or as a CFO, as I was, or as a board member. What hat am I wearing, and whose interest am I protecting? And I think you're right, is if in fact I'm acting as a trustee, yet I'm getting counsel from company, that may not necessarily be in the best interest of the employee. I think it's incumbent upon me that I go seek external counsel to advise me accordingly, or even external valuation people if need be. All right. So who are ERISA fiduciaries? So as we suggested, an ESOP trustee is a named fiduciary and clearly is that. But there are also functional fiduciaries. And I think it really comes down to anyone who exercises discretion or authority or control over management of the disposition of plan assets. I would tell you, certainly as a CFO who had the responsibility of administration, to the extent that I was exercising those responsibilities, I had some fiduciary responsibilities. Certainly, the board of directors, appointment of a trustee is exercising fiduciary responsibilities. I would also tell you that it's debatable, but even to the extent that there's repurchase obligation, you could argue that a board is exercising fiduciary responsibility in that capacity. Administration committees, or if it's not administration committee, it could be an officer of the company has administrative responsibilities, as suggested, is exercising those fiduciary responsibilities. And then, of course, outside advisors. We get an example would be is in the company that I worked with previously, we were a minority ESOP, but we had a lot of success. And the ESOP was accumulating large investments outside of the company. That person was as a fiduciary of the trustee in terms of making decisions to invest in those planned assets in a proper manner. All right, next slide. Just continuing on very quickly here, board meetings. A question that I think is frequently asked is, does the trustee have the right to attend? And I think that there's this presumption that they are, and the answer is no. The trustee has no greater right to attend board meetings than any other shareholder. And while I would tell you, should the trustee attend and when, the answer is I, but I think it's likely via and that's at the discretion of the board. I would tell you that in my experience, that in a collaborative environment, that you're going to work that. But I also would tell you that that's where potential conflicts come into play. If you're an internal trustee, and I'll use the example of myself again, is if I'm the trustee and I'm an officer, yet I'm not a board member, what right do I have to attend? Well, the answer is none. But and quite honestly, even if I attended, what hat am I wearing when I'm attending those meetings? So I think we found several circumstances where an internal trustee has to refrain. This is an internal trustee; it's a voting member, meaning a board member, due to conflict. So I think that is not so unusual. You see the founding CEO, who is still the trustee, who's also a board member. They're wearing multiple hats and multiple roles, and quite honestly, they can be frequently conflicted. Just important that the internal trustee be very mindful of this, and again, what hat they're wearing. Next slide, please. All right. So in shareholder meetings, and I think this is probably one thing that I think is important to note, that the trustee definitely needs to be prominent in this role, is the trustee represents the ESOP trust at shareholder meetings. So when those are called, I think it's important that the trustee is front and center, whether it's an external trustee or an external. And while the trustee represents the ESOP throughout the year, specifically during annual meetings, the trustee should be present, but oftentimes, especially with the employee owners, I think there's a greater benefit. I think it's important to know that from the employee participants, the employee beneficiaries' interest, that they're being represented, and that trustee is exercising the responsibility of being an advocate and protecting the assets. Obviously, we talked about in the shareholder meetings before that, electing the directors. So when, whether it's providing a slate of directors or being provided a slate of directors, it's important that trustee exercises his or her responsibility to vote the shares and elect the board. And typically we see that done in the form of a slate being provided from of qualified board members. And that could come from an administration committee, it can come from a board committee, it could come from management, but that's what our experience has been. And then again, potential conflicts for an internal trustee here would be is that, the internal trustee has the burden of perception, is, which hat are they wearing? And I think it's important that trustee goes to great lengths, if they're internal, to ensure that the shareholder employee participants that they're representing the interest of, that they know they're wearing the proper hat, and that those blurred lines of perception can be overcome as much as possible with transparency, and making sure that the employees know that exercising the role of the trustee and the trustee only. Andy, I'll hand it off to you. And you're on mute, Andy. Andy?
Bear with me. I thought I could unmute it easier than I did.
We got you back, Andy.
There you go. Well, Steve helped outline, what those roles that you have as a trustee. And what I thought we'd do is kind of drill down on some of what we'll, call the big stuff, right? What are the things that you're going to be required to do annually to operate the ESOP? One of the first ones that was touched on, of course, is the valuation of the stock. And I think what we'll do is give you some examples of the best practices you can follow to help determine the value of the stock. I won't read through the sample valuation update checklist you have here from the presentation, but this can be a resource for you. Print this out. It'll give you a sense for kind of the step-by-step stuff you have to do. I think case in point would be, we'll start off by talking about the trustee selection process for the appraiser. I think we have a more detailed slide next for that one, Alex. If your ESOP has been in place for a number of years, you may have used the same appraiser for multiple years, or maybe the whole time you've been an ESOP. Perhaps you've had a switch of appraisal firms. In either case, each year, you're kind of making the determination to hire that valuation firm again. And you want to make sure that the valuation advisor, be it an individual professional or a team of people within a firm or organization, is qualified. It's up to you to document the qualifications. Perhaps that's as easy as, asking them for a current, presentation of their qualifications and experience. Maybe it's a resume or a summary of the relevant experiences that your appraiser has, and documenting that, and just keep that on file with your engagement letter each year. You might want to help have that as a document as to why the valuation firm was retained. And, you can always interview more than one. Like a lot of services, I have seen companies use a request for proposal or RFP, for that part of things to ensure that they are, getting access to, the appraisal services that their ESOP needs.
So Andy, this is Steve. Just quick question on that. In terms of what do you consider as a best practice of frequency of selection of a evaluation firm? Or maybe Alex, you could weigh in.
Yeah, I think I have seen some ESOPs where maybe it's every 3 years or something. They want to do a more formal process, and they do each year in terms of, requesting data about the firm or proposal. Technically speaking, you should probably get some information about the company each year.
Yeah. So at Ventura, because we have multiple clients with many of the appraisers we work with, it's a little bit easier. But we have a valuation interview questionnaire that we have for any appraiser that's not already on our approved list. We update that every other year for the appraisers we're working with. But then, as part of each ongoing valuation process that we go through, we make sure to ask questions. Has anything changed with licensures? Have you been sued? Or is there anything that would affect kind of your standing within the valuation community, such that we would want to rethink engaging your firm this year?
Yeah, I think one bit of advice for an internal trustee I would offer is, the external trustees like Alex or Steve have those kind of questionnaires prepared and customized that they in the form they're most comfortable with. But you can always ask your appraisal firm, have you responded to something like that? Do you have, some representative answers that they could share with you? And that would, I think, go a long way to helping show that you're being prudent and good with your decision. Maybe ask them for what they have sent in as, relevant, question and answer responses to help document their selection.
And from time to time, we get a little bit of pushback on our questionnaire, and so we're always happy to say, well, if you've got one you've done for Steve or for another trustee, we'd be happy to take a look at that, so they're not trying to customize something for a one-off type of questionnaire.
Yeah, I definitely think that to the extent that an internal trustee can secure a questionnaire, and Andy, I know that you guys are very accustomed in the valuation community these questionnaires from trustees, I think an internal trustee would be very prudent to ask for samples of that. Quite honestly, those questionnaires are usually quite thorough. And I think that what I found I didn't have an appreciation of until I started really working with a lot of companies as a trustee is that, a valuation firm is not just a valuation firm. That, they all have different competencies and skills and expertise and affinities for certain industries or what have you. And I think that as a trustee, it's incumbent on you to go through that exercise of saying, why are we selecting it? And frequently, especially as financial professionals, we look at cost, and cost isn't necessarily the best answer.
Very true. Well, let's talk about kind of once you've gotten maybe a draft of that valuation report from your appraiser, the things you're going to want to do. Annually, you're going to want to review the previous year's appraisal report. Pull that back out of the file, either paper or electronic. Maybe do some comparisons year over year. Your appraiser can help you with that, and you can also do some of it yourself to document your review. Make sure you've got a signed engagement letter for the service each year. I've seen sometimes where you might have an engagement letter that covers multiple years, or you do a letter each year. And make sure that's clear that, the valuation firm, like let's say Katz Sapper Miller, is working on behalf of the ESOP plan, and that the engagement letter documents that the ESOP plan and trust is our client. We may be valuing ABC Corporation, but ABC Corporation is not our client on that engagement. Our client relationship, our duty of care, is to you as the trustee of the ESOP plan and trust. A little bit of a distinction you'll want to make sure is captured correctly in the engagement letter. Part of providing that valuation to you as an internal trustee, it's incumbent upon my firm to make sure I am independent and not conflicted in providing that service. I'll give you an example. Katz Sapper Miller, we have a very large accounting, audit and tax part of our firm. That's a much larger portion of my firm's activities than my evaluation practice. If one of our clients that we do annual audit and tax work for calls me and says, Andy, can you serve as the ESOP trustees valuation firm? I'd have to say, no, I'm not independent, because my firm's already providing an audit or a tax return to you. So you have to think about making sure, even if it's a fine firm and good professionals, they only can play certain roles for you in your ESOP. These days, with everything being very litigious and investigations, lawsuits generated from the DOL, you'll want to document whether or not your advisors are active in those areas. And I'll just say, because it is very litigious out there, don't be surprised if the answer is yes, or at some point in their background there has been something where they've been subject to DOL action or some kind of litigation. I don't want you to view the answer as yes there as necessarily a knockout for using that service provider. I would instead say, just understand, what happened, I think is the more important thing. I would feel a little different about that on the next bullet, the documenting felony convictions. That may be more of a bright line as opposed to, being subject to DOL review. Google search can tell you a lot. I think Steve may have touched on this earlier, but let's emphasize it here. There's a phrase you'll need to know, which is the prudent expert standard. That's the standard that a trustee is held to under the law. That means you have to exercise prudence and care, and you have to be, a prudent expert. You have to understand that, to get the best data, your valuation firm needs to have access to appropriate information. The old phrase, garbage in, garbage out, might apply here. I've heard the phrase of a pure heart and an empty mind is no defense. Doing your best is not sufficient, right, in this role of internal trustee. You're expected to be as prudent and have as much knowledge as external or professional trustees. And so I know that's a hard standard, but by participating in this workshop, you're helping document that you're taking, prudent care in your job. I would recommend keeping a copy of these slides in your annual evaluation folder or in the documentation work papers, either print or electronic, that you keep to document you are doing everything you can do to gain that knowledge that you need as a trustee. All right, so we've talked about the valuation, you reviewed it, you know, but there's another part of this. You know, the ESOP appraiser you hire actually gives you a report that says we're worth $110 a share, but you actually, as the trustee, determine the value of those employer shares that is used for making payouts in that calendar year. Coming up here later in the presentation, we're going to do a discussion about the relevant valuation aspects of the current, you know, pandemic and COVID-19 and how that can affect things. So we have some information coming up on that for you. But a big part of this slide I want you to understand is reading and understanding all documents. I think, you know, there may be some work that you feel like you've already done, you've already read the plan at one point or the trust document. I would advise keeping that very handy, either electronically or print, rereading it, you know, reading it once a year or talking to your ESOP counsel about any needed amendments to that plan, as small as they may be, to keep it current and to understand it. One example is right now, right, with the COVID-19 issues out there. What does your plan document and trust document say about your valuation of the stock? You know, should you consider getting an interim 2020 valuation if you are a 12/31 plan year and your 12/31/19 share price all of a sudden feels high based on what's been happening in the economy? Your plan document's going to help direct you onto what you should be doing there. On the next slide, we want to talk about, you know, what are some of those things that you should read and understand, like I was saying. The plan document's one of them, but I think the plan trust is another one. I would also say keep handy anything directly tied to stock performance. You know, it's very common in an employee-owned company for us to have stock-based forms of compensation. You know, that's what a stock appreciation rights plan does, or phantom stock for perhaps you as one of the internal trustees as a key officer. It's also possible that when you formed your ESOP, a warrant or warrants, which are stock options in the company, were granted to a seller that was providing a seller note or debt to the company. And so you'll want to understand how that works as well. And you know, it's okay to ask for advice, ask questions of your advisors. That's a great way to document that you're reviewing and understanding these things. You might have an ESOP loan outstanding, especially after an ESOP formation. We sometimes have long loans so that we have stock to allocate out to plan participants over 10, 20, 25 years or more. There may be a pledge agreement, like those shares may have been pledged in security for the loan, and then there has to be an annual like release of that pledge so that you're only, you know, pledging shares which are still in suspense. And you may have to change each year how many shares are, held in suspense as you keep allocating out stock.
So Andy, I think this is a great slide, and I think that all internal trustees should make note of this, because I think it's very frequent that I harken back to my experience as an internal trustee, and I understood the concept of valuation. I certainly understood the concept of participant statements, getting those things out, distributions, even voting the shares. But the black box for me was this, essentially this slide, is these are all these things that you as the trustee are charged with ensuring that they're executed and administered correctly. And, I'll be honest with you, I didn't even know a plan when I was early on. I knew the plan document, but I wasn't familiar with the plan trust. And I think a lot of trustees might even know about plan trust agreements, which is really the guidance of they're supposed to operate. And moreover, the fact that, this is potentially where you get a little bit, let's say the CFO, and you weren't even party to stock appreciation rights or the phantom rights or the stock options or the warrants or what have you, but you need to understand those things. And so I think it's important that you take a snapshot of this page and say, do I know and do I understand my roles and responsibilities of these particular things? Because they're not probably everyday things you're aware of.
Very true. Very true.
To piggyback on that, Steve, with things like stock appreciation rights or phantom stock or warrants, if you were the selling shareholder, if you are an internal trustee and you are a party to those and any changes are made that affect that, there's going to be a natural tension and a conflict between the ESOP and the stock appreciation rights holders or the warrant holders. And it's not necessarily a trustee decision to approve those or not, but they need to understand which hat exactly they're wearing when any of those changes are implemented. And that's a great opportunity to ask for some extra help and advice from your counsel along the way, because you're just going to have naturally more conflicts in those areas.
Very true. The next two slides we'll go over quickly because we've talked about some of this when Steve did a great job of helping you understand corporate governance. But, as the shareholder of record, the shareholders have to vote. And if you're a 100% ESOP company, your ESOP trust is voting all the shares. And so there will be need to vote the stock in annual shareholder meetings or at other, special times. You'll have to review the bylaws of the company to make sure you verify what rights there are. And how the vote is determined or what decision is made on how to vote can vary from ESOP to ESOP. Let's go to the next slide, Alex. We talk about directed versus discretionary. These are terms you may be familiar with. Think of it this way. If you are the ESOP internal trustee, you can be directed by the ESOP's administrative committee to, vote certain ways. And as long as voting that way doesn't, in your mind, seem to, violate the ERISA law, then you vote as directed. It makes it easier, right? It makes it more straightforward. One of the functions of the trustee role that I often see that's discretionary and not directed is the determination of stock value. That's where you'll have to use more independent judgment, or maybe voting on the board of directors, is generally something you're directed on, but you may have to use your independent judgment. This is a great one, Alex and Steve. Any thoughts on, what the internal trustee is going to be discretionary on as opposed to what they're going to be directed on most of the time?
Sure. So from Ventura's standpoint, we have engagements both as directed and as discretionary trustee. The two items that we're never directed on are the setting of the annual stock price and the selection of the appraiser. And like you said, Andy, we can still be directed, but that doesn't override ERISA. If we're directed to vote for the seller's cousin, Davey, who he plays basketball with twice a week, that doesn't mean that we have to do it just because you're serving as a directed trustee. There's still the overarching, minimal level of investigation that you would need to do into those directions.
Yeah, so I would agree with that, Alex. We're very similar. And the only thing I'd probably add, and I'm sure I do this as well, is just in the event that there's a future transaction, we're going to be discretionary as well. So certainly setting the value, voting the shares, and exercising in transactions. I think the other thing that I would also tell you again is being directed is not a pass by any stretch of the imagination. So it doesn't allow you to just basically say, okay, I'm going to accept the responsibility. You still have an ERISA fiduciary standard you have to exercise. And even in a directed situation, the standard doesn't lessen. It means that you've agreed to direction, and if for accept that direction, then you need to resign as trustee. And I think that's very important to know.
All right, let's move on. It's okay as a trustee to delegate. There's specific functions which it's probably more efficient for you to delegate. I'll give you one example. Investment management is listed on this slide. I have seen partially owned ESOPs where they have accumulated money, that's $1 million or more, millions of dollars in some cases, because they've been getting distributions while the tax-paying shareholder is using their company distributions to pay taxes. your ESOP plan won't have to pay those taxes in the current period, so you might invest that money. And if you're not an investment advisor professional, or even if you are, I would still argue you should get professional investment management for your ESOP's non-company stock assets, especially if they become, high 6 figures, 7 figures or more. It's okay to delegate things like tax form preparation, plan administration. But on the next slide, as we talk about, you do oversee those trust activities, right? Someone else may administer them and help you, give you the data on, hey, here are the payments you have to process. Here is what the allocated and unallocated shares look like for this year's release. Here are the stock certificates and amortization schedules. Lean on your professional advisors to do that work with you and for you, but understand that you still oversee it. Finally, a couple of things I want to hit on before we get out of the big stuff. I think we touched on some of this, so we won't belabor the point, but you may be still buying or selling stock, even after your ESOP is created. In this case, you may have to act in your own discretion, like discretionary and not directed. To do so, you'd have to make sure a purchase is in the best interest of participants and make sure you don't pay more than fair market value. I'll give one simple example. I had an ESOP which was partially ESOP owned, and there were some, children of the original founder that also had some shares, and they wanted to sell the stock. And the company and the trustee and everybody was on board with the concept. There was cash to do so inside the trust. But, let's say your valuation date's 12/31. You may not have that appraisal until now, March or April of the time afterwards. You'll need to make sure your valuation firm helps you understand that if you actually buy those shares from those siblings or from those kids, in that example I gave you, make sure that the value as of March or April is no more, it has not gone down, since the 12/31 price. And if it did go down, you should pay a lower price for the stock. You want to pay no more. It's okay to get a bargain price. It's okay for you to buy for less than fair market value, but you do not want to pay more than fair market value. And let's move on. One other example is you might also sell the stock. Maybe there's a block of stock or all the company's stock that's going to be sold. If so, the same fair market value standards there, but now think of it this way. You need to make sure you do not receive less than fair market value. It's okay if you get a premium. In fact, that's good negotiating to get a higher price and maybe a premium value, especially if control of the company is being transitioned. And if you do have a sale of the stock, a best practice is to get a fairness opinion from your valuation advisor dated as the day of the close to make sure you're being advised that, this deal looks fair from a financial point of view.
Yeah. So Alex, or Andy for that matter, I'm curious, what do you guys consider a best practice, or where you would envision a situation as a trustee where you'd want to secure a fairness opinion, whether you're buying or selling?
For Ventura, it's all transactions. Anytime the ESOP's buying or selling stock, we're going to get a fairness opinion for that transaction.
I have had some transactions where a fairness opinion is not required. Maybe there's something of a different form that the trustee can receive. Maybe it's an adequate consideration opinion, or maybe a comfort letter, or there's other types of deliverables. But the fairness opinion is the highest one, in terms of standard. There's going to be a fee involved, but it also does protect you as trustee. And therefore, I would advise you it's, and your lawyer will tell you it's probably sensible to ask for it.
Right.
Yeah, that's a good point, Andy. Especially, before I joined Ventura, I was in appraisal, and we would work with internal trustees, and sometimes they would do very small transactions every year. The cost of the fairness opinion might even be more than the dollar value of the shares transacted, for instance. That's not a transaction someone would hire an external trustee for. It's also a transaction that it might be just fine to get adequate consideration or other.
Exactly. That's where being prudent and looking at the dollars and cents can make sense. Well, I know we're close to our completed time. I want to make sure we have a chance to have Alex's thoughts shared with us on COVID-19 and its impact on valuation right now.
Sure. So this is the the hot topic on everyone's mind. It's the reason we're not doing this in Minneapolis and we're doing it over Zoom. This chart is already somewhat dated, only being a week old. We're recording this on April 9th. The 23% decline to March 30th is now 18% decline to the close of business yesterday. So we're moving in the right direction, and might be solving some of these issues along the way as this market recovery hopefully continues on. So we'll have another updated number to talk about in the chat when this presents on April 22nd. But the only thing we know for sure is we'll know an awful lot more as we sit there then than we do today. The big things we need to be thinking about with the COVID-19 impact on valuations is, assuming everyone is on a calendar year end, the consensus is that there's no reason to incorporate any type of impact of the virus on those 12/31/19 valuations. Fair market value is defined as using what's known and knowable as of our valuation date. And what we observed is a stock market that hit an all-time high as recently as February 19th. So in the market, it's pretty obvious that there was not the concern on stock market investors of the coronavirus having the impact that we now know is existing. The biggest impact, and most companies are going to see this, is if we did a March 31st or maybe even a June 30 valuation at this point, most companies would have a lower stock value than that 12/31/2019. And that may or may not be appropriate to incorporate an interim valuation for your company's 2019 and 2020 distributions. The biggest issue that we could envision for companies that are hardest hit by the coronavirus is that second bullet point, the kind of run on the bank situation. If you've got a mature ESOP with a lot of allocated shares, if you have a lot of participants that are eligible for diversification, and you're sitting in July or August of this year, those people have 8 months of knowledge that the performance is not what it was in 2019, and they could all of a sudden elect those diversifications up to the limit and cause a run on the bank where the company is now forced to redeem shares at a dated and high value at that 12/31/19 price. So that's kind of the worst case scenario that we can envision. And one of the good reasons it would be worth exploring a potential interim valuation. Your plan document is going to tell you whether or not that's allowed. It's something that I don't think many people took a very hard look at until we've gotten ourselves into this situation, because frankly, we just haven't had a consistent need for interim valuations with any of our clients. That plan document can be amended. It's something you want to, as internal trustee and as potential board member or member of management, absolutely want to be consulting with your other ESOP advisors on the ramifications of amending a document, the ramifications of implementing an interim valuation to be used in distributions. Because for each of these decisions that you make, it's not like you can say, there's a solution here that's going to be good for everybody and that's what we should do. If you select to do an interim valuation, you're going to create winners and losers as a result of that. And it's important to understand the impact of that before you make that choice.
So Alex, I think that's a very crucial point. And quite honestly, this slide may be the most challenging experience an internal trustee is ever going to have, is this particular. And what I would counsel people on this is don't make decisions. I think moving is good counsel in this situation, because we are in an extremely fluid situation right now. And you just said it, is if you choose to do an interim valuation, there are going to be winners and losers, and there are consequences of that decision.
Absolutely. And yeah, the other thing is, as we sit here on April 10th, I have no ability to say that a March 31st, 2020 valuation is any better or more relevant than a 12/31/19 valuation. You really need to kind of delay this call for as long as possible until you've got some better visibility on what 2020 is going to look like as we get kind of on the downside of the slope, when we can have a reasonable expectation of when business gets back to normal, because otherwise you're trading something artificially high for something potentially artificially low. The other thing to be thinking about, which isn't necessarily a trustee decision, but it does affect kind of all of the stakeholders in terms of who is dependent on the share price, is the effects on any stock appreciation rights or warrant plans. Since those aren't a part of the ESOP, it's rare that they would ever qualify, or it's possible that they wouldn't have an interim valuation feature. Some of them might be defined as the most recent year-end valuation, in which case you may be a little bit stuck there. Some of them may be defined as the most recently performed ESOP valuation, in which case they might come along with whatever interim valuation that was conducted. But definitely important to read those documents, ask your ERISA attorney what their thoughts are on whether the interim valuation would end up impacting those other stakeholders. The biggest factor that we're advising our clients on so far is to understand, well, what do you think your repurchase obligation for 2019 is going to be based on your 12/31/19 stock price, and weigh that back and forth with the cost of going through the exercise of an updated valuation. If you're a company that's got $15,000 of share repurchases that you need to do for last year, it's not really going to be worth it to update that stock price to figure out what the difference might be. It's going to be too costly, and so you're better off just paying distributions. And then the other thing that it's important to think about, Andy and Steve, you guys can chime in for where you are. We're somewhere between 1/2 and 1/3 of the way through our 12/31/19 update season, and another good reason to be as blinded as you can and focusing on what's known and knowable at 12/31/19 is because we need to have that price be set 2019. We can't be revising projections as we sit here in April, because a lot of those valuations are already canned.
Yeah, I mean, I think that's the reality, and I think that's the best practice. I'm really glad the valuation community stepped in and had a position on this particular issue, because I think that otherwise, quite honestly, chaos could have ensued on valuations. I still maintain that was the best decision. As Alex had suggested, we're in an extremely fluid situation, and we really don't know what the long-term impact of valuations are going to be, much less what is our economy, the long-term implications of our economy going to look like at this juncture. So exercising the way, in my view, was the best decision.
Yeah, and I think that, the good news is, by talking about this, all of us in the ESOP community and internal trustees better understand our plan. This goes back to what we talked about. This COVID-19 will probably drive a little more reviewing of your ESOP trust and your ESOP plan. It might lead you to amend those documents in a way that improves your situation, so you're ready for this for now or for any other kind of future uncertainties that come.
Definitely. The last few slides are a sample calendar of various deadlines that you need to have on your radar as trustee throughout the year. We won't go through reading the calendar to you, but please print it out. Please feel free to reach out to us with any questions you might have about these slides. We want to make sure we focused on the earlier part of the presentation with our hour. Definitely are available for any questions, both in the chat as we sit here right now, or in the future. Please feel free to save our contact info.
Well, thank you, everybody, for attending the workshop today. I know it's a virtual one, but I know our contact information is on there. Hopefully the chat room gave you a chance to lodge questions or learn more. And if there's a need for more, please follow up with us, and we'll be happy to be of assistance. Thanks, Alex.
Thanks for the opportunity to participate. Certainly appreciate my colleagues presenting with me in this situation. I think this was fun, and hopefully it proves to be a good experience for the NCEO participants.
Thank you both, Andy and Steve, and hopefully we'll be seeing you all in person at NCEO 2021.
Absolutely.
Absolutely.
There you go.